Well, we looked at investment drivers for long-term investors. Those are investors with a long time horizon for their investments that invest their own money and particularly don't use borrowed money to invest. And when we looked at that in detail, we found that the drivers for these investors are particularly good growth prospects in the countries where they invest, and stable macroeconomic conditions, good political systems, and particularly we found these investors don't look at interest rate differentials between countries in deciding where to invest. Interest rates might still matter for a couple of reasons. First of all, we looked again only at the long-term investors, which is an important class of investors, but there are other investors out there, particularly those investors that use borrowed money to invest. And for them, the interest rate is a cost component, and therefore they may be more sensitive to interest rate differentials. And secondly, even the long-term investors may become more sensitive to interest rates as we go forward. The longer the low interest rate environment lasts, the more they will be hurt financially and may start to look towards higher interest rates and therefore interest rate differentials in the future. Well, there are good indications that investor behavior has changed since the crisis. Most importantly, investors have become more conscious of the risks in their portfolio. These risks include a liquidity risk, which is the risk that you may not be able to sell your asset when you want to, and also credit risk, which is the risk that you may not get your money back. That credit risk also includes the risk of sovereign bonds, government bonds. For now, investors don't assume anymore that these are risk-free. And so there are good indications that that investors have changed their behavior since the crisis. Sovereign investors are becoming more and more important. These are the investors that invest a country's national wealth, which may include international reserves and receipts from oil and mineral wealth. And their assets have grown a lot in the past decade. They have a truly long-term view, and as such, they can have a bigger and bigger role because some of the private investors, as we've seen, have become more risk conscious, which tends to give them a shorter term view. So we think that there's an opportunity there for sovereign investors to take on some of the longer term risky investments that private investors now avoid.